The microfinance industry is a very important industry. It also is one that looks after individuals who will not be served by other institutions. So, which is why the responsibility is greater. But if you look at it, the State Bank has correctly applied a higher level of CAR requirement, capital adequacy requirement, because we bank those who are not banked by others, and therefore there is a greater responsibility. But then you have also a simultaneous implementation of IFRS 9, which are rather proactive financial accounting standards. And what is happening is, because of that, there is a greater requirement of capital injections by the parents. I would encourage the others also to be injecting capital, because right now the microfinance industry, most of the institutions, there is a capital breach, and there is a real reason for it. I think there is a lot of opportunity, but it's just, again, as I said, about having the courage to take that decision. So the point is that the microfinance industry is a critical element of the ecosystem, and you have to, because as you know that because of the macro environment, you do have a larger percentage of the population going under the below the poverty line. But then when you are the fifth most populous country in the world, then there are certain responsibilities that you have and that you need to take care of. You have to have the right kind of products. Maybe 10 years ago, we did a focus group because we were looking at how to bank women. And the focus group results are very interesting. They said, we don't want women-only branches. We want to come to the same branches as long as you treat us with respect and that you have products for women. So I think that's where it's very important when you look at the products, because you need to have products for women. And that's where, again, awareness comes in and the National Financial Literacy Program comes in. But the point is that there is one curriculum which is mandated by the State Bank. And again, I'd like to appreciate the State Bank for their initiative here. But we need to develop modules for the different customer segments. You know, the housewives need a separate segment, the school children need one, the university students need one, the freelancers need one. So it's the availability of the product and it's that awareness. So it's it has to be hand in hand. You have to empower women. And in our society, we have a large number of first-generation workers who are coming out of their homes for the first time. And they're in frontline roles. So you have to really empower them with the skills. You have all these home-based workers and these home-based businesses, which social media has also fueled because they've created a marketplace for them. But I think it's fantastic because it allows them to earn without stepping out of their house as well. But that's again where the banks come in, because they've created that ecosystem where they can take transfers, they can take payments, they can make payments, etc. So that you can see that revolution coming in. When you look at the payment systems, right, that has allowed, for example, if you look at it, all these home-based chefs, right, who are being able to sell the food out of their house, the clothes, whatever it is, there's small cottage industries, there's small businesses. Even in terms of emergency relief, like you will see, there will be people who are affected by the floods, they get payments, the transfers. If I go back to COVID, the fact that, there was BISP, because you had a lot of home-based workers, a lot of daily wage earners who were just so impacted. But the fact is that the government could assist them through those subsidy payments. And that's again where the banks came in. When you talk about the SMEs, so the small, medium enterprises or the entrepreneurs, they have their own unique needs. And that's where you need banks to be responding to them, because what they need is working capital finance, so short-term liquidity rather than large capital investment. Again, when I spoke about how the microfinance industry is more people intensive, This business is similar because you need the people to really handhold and work with those small entrepreneurs, take the risk on them, then also look at whether it's a flexibility in repayment schedules, whether it's seasonal businesses, irregular income. फिर आप अगर देखें तो there are lower collateral requirements, so you have the use of alternative collateral or credit scoring, and cash flow lending. फिर like advisory, bookkeeping, market linkages, mentorship, access to digital payment systems and platforms so that they can transact and manage their cash flows. फिर होता है एक lack of formal records, informality of many MSMEs, weak credit history, fear of cost, low awareness in the financial system, high cost of borrowing. So again, these are all the kind of things that you need to be working with. I think there needs to be more, whether it's, we need to have better building standards. We also need to have better planning standards. We cannot no longer be chopping down forests and orchards and building housing societies. I think what we've learned, particularly in the 2025 floods, is that the river takes back what its path. And I think it's been a very scary learning, but an important one, that we need to start respecting nature. If we are going to challenge nature, we are going to bear the brunt of it. You have a lot more conversations about sustainability, about these green practices. So I think it's important that we pursue that, but follow through as well. If you look at Bangladesh, because where they were impacted by floods, but today they're a flourishing, thriving economy. So they've learned, and I think we need to also now learn and invest for the future. I think what can help, especially in the climate resilience, is where you have disaster relief and resilience funds which are available to banks. For example, risk sharing guarantee, that allows us to sort of lend to these critical sectors, knowing that there is a risk sharing guarantee, and that's where I think the DFIs come in, and the DFIs need to be doing more of that. When you have the right kind of technology, the right kind of core banking system, it allows you to build the correct technology stack, which allows you to be able to serve your customers much better. When we were building our technology stack, we were able to build a tablet-based customer management system, which allowed tab could function within a 50-kilometer radius of the branch. So what we do is that the microfinance, the loan officer, takes that tablet, takes it out to the customer. Through biometrics, we are able to populate the data from NADRA, which we pull from NADRA, and then it's verified. And then we take their details, their business details, their application is so they are onboarded, digitally onboarded, then their application is accepted through that tablet. And in fact, our system allows that within 8 hours, we are able to disburse the loan. So I would say that, from almost a 12-day turnaround, which was mostly paper-based, when you have the technology and it's 8 hours, and then through the agent network, we are able to also take back their loan repayments. So that allows customers, because a microfinance customer, if they have a small shop, they have to shut down their business to come to the bank. So this allows them to be serviced and to service their loan without having to even shut down their operations and come to the bank.